feels a bit like a vengeful god, and that it will do whatever it can to confound you and to inflict the maximum amount of pain upon you. Like Danny was saying, we're seeing longs being scalped, we're seeing shorts being scalped. And I think a lot of this is a symptom of the fact that even though we're looking at our 15, 16-year history of the asset, it's still very poorly understood, not just by the majority of the retail public, but also institutional investors as well. And a lot of those institutional investors are not, I think, with the best will of the world, intellectually on board with an asset that trades 24/7, 365. They don't necessarily appreciate the fact that Bitcoin always reacts first and it reacts hardest to whatever's going on in the wider market.
Welcome back to Treasury Talks. We are Thanksgiving week. Before we get sleepy, we're still grinding away. We're still covering the markets. We got the team from HODL from the UK this week. So welcome Freddie, new CEO, Danny Scott, head of Bitcoin strategy at HODL. Appreciate you guys coming on. We have a lot of stuff we want to cover today. So first, welcome to the show.
Thank you so much for having us. It's great to be here.
So let's start out with how are things going this week in the UK? Freddie, you mentioned you're concerned a little bit about what might come out with the Chancellor's budget tomorrow. Just explain to us noobs, normies that don't know a lot about UK politics, what's coming down the pipe.
And happy Thanksgiving to all of our friends across the pond. I appreciate you spending the time with us this week. Bluntly on the budget, I think if I had a TLDR, it would be that I'm glad I'm not Chancellor right now. The UK is not in a great position. You'll probably already know that we spend already probably double what we spend on our military just on servicing our national debt, which is not a great position for any advanced economy to be in. We also spend more on servicing that debt than we spend on educating our children, which is, again, an unenviable position to be in. And if we carry on down this road, very soon, it's going to be the highest cost for the government. Specifically on cryptocurrency, what will be great to see is some acknowledgement that a de minimis limit on spending, for example, such as had been suggested by your own Senator Lummis in the United States, would be helpful. I think there's a great difficulty with our current government in understanding the advantages of the velocity of money in the system as opposed to the day one gains you might get from charging everyone capital gains tax when you spend your Bitcoin. It would be interesting, I think, for bodies in the UK to do some research to understand whether the increase in VAT that you might see would offset those losses in CGT. I don't think personally we're likely to see something that's enlightened from the Chancellor tomorrow. I did mention in the preamble, there's a specific piece of legislation that we'll be looking to find the Chancellor's speech tomorrow, and that relates to what are called in the UK the repo rules. So in the United Kingdom, if you use shares as collateral to get a loan, for example, then that is not treated as a disposable capital gains tax purposes. At the moment, the repo rules treat Bitcoin transfers to a lender in order to gain collateral, in order to use it as collateral, in order to get a loan as a disposal. And that really has acted as a kind of a sea anchor or a drag on the whole development of the lending market in the United Kingdom. Danny and I, our colleagues at HODL, we work in the industry. We have a huge number of products across the industry, and we know that this is a market that is champing at the bit to enter the United Kingdom. And at the moment, it's being hampered by poor regulation. If we can see that in the budget, then I can probably take the other downsides in order to get that huge roadblock out of the way. Danny, interested in anything you might have to add there as well?
Yeah, I won't touch too much on the what potential comes out of the budget tomorrow, but yeah, just in terms of what Freddie touched on there from the collateral piece and the Bitcoin back lending, which has been a drag. One of my other hats from my side, as well as HODL, is Coin Corner, which is a British Bitcoin exchange. We've been around for over 11 years now, always been just Bitcoin only focused. So we don't really do all the altcoin side of things or anything. So we are more taking in the US side to the strikes and rivers, etc. We have a Bitcoin backed lending product already, which is actually live to the Isle of Man, which is a small jurisdiction just outside the UK. And we obviously want to launch that to the UK as well at some point soon. There has been certain regs and certain things that have been holding us back. And hopefully, as Freddie alludes to here, that we can see something positive tomorrow, which will help alleviate, I guess, a lot of worries for people in the UK from the lending side around Bitcoin. It also crosses over with things like staking and other things as well, which are potentially issues the Bitcoin world.
Yeah, Danny, let me jump in real quick.
Yeah.
I'll say we actually talk about lending a little more than we even talk about treasury companies. Our site 21 rates like a nerd wallet for Bitcoin. So I think would love to keep following up with you guys on how that evolves, because right now Brian's deep in it and we talk internally just about, hey, with Bitcoin at 85, 86, 87, what makes sense on initiating a new Bitcoin backed loan. We have just different jurisdictions, even between ourselves and the States, where we have to decide what actual products are supported, and then decision making on, do you need this liquidity now? If you have exposure to treasury companies, do you want your spot being held at this custodian, or maybe hold on to that in cold storage? We'll get into that later, but Avi, let's jump into your next
Yeah.
question.
And I'm just curious, even before we get started on the company too, there's never a dull day in Bitcoin, but I feel like the past couple of weeks have been like traumatic in terms of, you go on crypto Twitter, for example, and it feels like the sky is falling. And then you look 2 years back and you'd be very happy if someone told you the price today is going to be where it's at. Would love your guys' take, just being so close to the space. It was really interesting hearing about the UK side of things, but on a global scale, like, where do you think happened on 10/10, I think was a big date for a lot of folks. Moving on from there just seems to be a lot of chaos where it's down red. And this is across markets too. I think you're seeing the stock market also take a tumble during this time and a lot of uncertainty. But again, in this world, you look back throughout history, there's always uncertainty and we tend to make ourselves out. But would love your guys' take just on the overall feel of, you think through the end of the year, we're going to continue to go down and we need QE to save us here in the US, or are there other angles that you guys are taking a look at today?
Yeah, sure. Yeah, do you want me to jump in, Fred? I'll jump in on a few
Yeah,
things.
you go first. I'll jump in off.
The first thought process I was trying to come across, that there's not one thing that is affecting the price in any sense. There's a combination of many things that are affecting the price. What you touched on there in the 10/10, that's the 10th of October, and we started to see a bit of a downturn in what we saw in the market. We know now from, I think you'll have seen the announcements around the MicroStrategy side of things, where there was the index delisting in some respects, or whatever you call it and phrase it as. There's a potential there that something might happen which would effectively remove any Bitcoin treasury company that owns, correct me if I'm wrong here as well, by the way, guys, I've briefly been trying to keep on top of this, but we've been a bit snowed under here recently. But any company with over 50% of their assets in crypto, they theoretically will be excluded from the index itself, which would obviously mean that flows that will typically be coming into that index will no longer be coming in via the index into these companies. I don't believe it's as big an issue as people are making out. I believe also the push for this actually came from, was it about 18 months ago, where it's now, is it the 15th or 16th of January, I think, is the decision time as such, of when they're going to decide how this will happen. A lot has changed in the landscape since the sort of, I guess, the idea and the discussion paper or whatever it is they published 18 months ago. A lot has changed. The landscape has changed. The presidents have changed. It is a whole different ball game at the minute. So I'm not sure if it would even become a thing and whether it just gets disregarded on the 15th of January. We'll have to wait and see. The flows, I don't believe, are really big enough for the indexes that this is excluding from. It's not the likes of the S&P 500. I believe it's smaller ones. And on the MicroStrategy side, I also believe, I think I've seen estimates of maybe towards a couple of $100 million worth of exposure to MicroStrategy, but nothing more. Whereas I've seen some people speculate it's towards 10 billion or something, which I don't think is correct. I think is potentially mounting out of a molehill in some regard. I think it potentially was a coincidental 10th of the 10th timing to everything else that was happening around the markets. Obviously, the mainstream markets, the traditional markets, had a hell of a tumble anyway as well. I know the AI bubble concept around what everybody's talking there also took a bit of a tumble there. And something that a lot of people I don't believe a lot of people seem to look at in terms of ETF flows and the Bitcoin ETF flows. When the main markets take a bit of a tumble, we see the Bitcoin ETF flows have a net outflow during them time periods. And obviously always with that drags the price down. The net outflow of a Bitcoin ETF is the ETFs effectively having to sell the Bitcoin because they're holders of that ETF are obviously selling. That obviously causes downward pressure on the price. And we do see that in quite large quantities over the last week, where we saw the price dip down into the 80,000s, where we're at now. Actually, it's probably been like the last 2 weeks. There's been very large outflows on the Bitcoin ETFs. I always try and reiterate this to people. This has nothing to do with Bitcoin and the fundamentals of Bitcoin, or Bitcoin is collateral damage, I think, in the markets at the minute and the way things are happening. We saw during the crashes on the mainstream markets, the traditional markets, we saw the Bitcoin ETF outflows hitting, I think there was a day at about $800 million. There was another day last week at about $950 million. They were the second and third biggest outflows of the Bitcoin ETF since they began nearly 2 years ago. Of course, that's going to create a Bitcoin price movement and a downwards pressure on it, which is what we saw.
Mm-hmm.
That in combination with obviously the MicroStrategy piece, of which we've touched on, also in combination with a lot of the leverage that's been at play. And I think you'll see a lot of speculation around the leverage side of things now, and the market makers chasing shorts and longs. And they've effectively chased that down and cleaned up a lot of the leverage, which has now been liquidated for people that had a lot of long positions. So I think that's what drove effectively a combination of those. Plus, I'm sure there was many other things in combination with that drove the price down in the 80,000 regions, which has now settled down and had a bit of an uptick over this last couple of days. And we're starting to see some of the positions start to build again on the leverage side. Another really interesting, sorry, I'm going on and on here, but these are all
I'm learning. I'm loving this.
There's two other things I'll just very quickly touch on. One of the sort of indicators I always look towards as well is Finex's long positions, and it's a really interesting graph you can go and check out, and you'll see a lot of the time where people are the whales or the individuals, whoever that is, may be on Bitfinex that are putting the long positions in, and you'll start to see that there's a bit of a trend sometimes as we hit bottom periods and bearish periods, the longs start to increase and drive up. And the longs, I believe now, are on nearly the highest long positions on the Bitfinex side since I think June 2022, which was at the Luna crash at that time, I think, or was that I think it was the Luna crash at that point.
Around there.
Yeah, it was Luna.
Yeah.
It was that summer before the FDF cracking a wind.
Yeah. And so it's the biggest long positions at the minute on there since with the Luna crash. So you start to see how that plays out, and it plays out over a long time period. This isn't like they put the longs in and they close in within the next week or two. This usually takes a sort of 6 to 12 month period where they slowly close them long positions out and come back down again and then build them up at a later point. So it's really interesting to see. It's a good indicator to have a look at and see where we are in people's sentiment around Bitcoin, and especially the particular whales of Bitfinex that have been in the industry clearly many years trading this, and you can see that from charts. The second thing, just to touch on from a Coin Corner perspective, we've had to bring these up now, something separate. The Coin Corner perspective,
I was just supporting your point, Danny. This is our friend Jeff Park. He's over at ProCat, BTC. And yesterday, the top 10 traded IBIT options were all calls. And so he was talking about that. He even talked about a 500K options position that he saw come through on the Condor going towards January or end of December. So very interesting on the positioning side, because the funding actually flipped negative to where shorts are now paying longs on Bitcoin, which hasn't been the case for, I feel like, 6 months or maybe even longer than that.
Thank you. Yeah, and very quickly on the Coin Corner side of things, obviously we get to see what the audience, the customers are doing, selling, buying, etc. And this last week, even with the price dips, sentiment from our customer base is that the individuals buying Bitcoin was up probably about 15% in comparison to the average. So there was an influx of more people buying Bitcoin this last week during this price dip than usual. And businesses was the more surprising one. Businesses were up. We got these stats earlier on. I was talking to Freddie on this earlier, but businesses were up about 92% in terms of buys in the last week in comparison to the average of the previous 2 months, which weirdly shows, and I believe that's Bitcoin on the balance sheet businesses that are making purchases. These are private businesses as opposed to any public treasury sort of businesses. But that was quite an uptick in businesses that were continuing to buy during that dip. So the sentiment from the retail audience and the retail business audience as well is still clearly quite bullish and pro. So yeah, very good insight from that. I will be quiet now, Freddie. Pass work to yourself.
Well, I was just going to make some jokes, Danny. You've given us all of the useful data. I was merely going to remark that for anyone who's been in the space for a long time, Bitcoin feels a bit like a vengeful god, and that it will do whatever it can to confound you and to inflict the maximum amount of pain upon you. Like Danny was saying, we're seeing longs being scalped, we're seeing shorts being scalped. And I think a lot of this is a symptom of the fact that even though we're looking at our 15, 16-year history of the asset, it's still very poorly understood, not just by the majority of the retail public, but also institutional investors as well. And a lot of those institutional investors are not, I think, with the best will of the world, intellectually on board with an asset that trades 24/7, 365. They don't necessarily appreciate the fact that Bitcoin always reacts first and it reacts hardest to whatever's going on in the wider market. And in some respects, I think it's once investors, particularly institutional investors, begin to realize that, they will see Bitcoin as quite a useful piece of their portfolio. So I've had conversations with hedge funds over the last couple of years who are quite excited by the fact that if an event happens, let's say Saturday morning when traditional markets are closed, that they think is likely to lead to a massive crash in markets on the Monday, but they have a Bitcoin position, they can liquidate that over the weekend. And they can have a hell of a lot of dry powder by Monday ready for that incipient crash caused by the Saturday morning event. So from an institutional perspective, having an asset in your portfolio, even if you're just holding that asset for purely cyclical purposes, is extraordinarily helpful. You benefit from the fantastic compound annual growth rate, and it's liquid all the time. If you need dry powder, you can liquidate that at the drop of a hat. And it's interesting, I think, to map the behavior of the Bitcoin liquidations and purchase cascades against their interplay with the traditional market.
Very interesting. I was thinking the same thought real quick, and then Rothy, I'll let you go in and ask your question. But when you were talking about some of the, like the last couple of years, you've seen a lot of institutions start to come in, right? Similar, I was making this parallel in my head of with the retailers during like summer 2017. If they entered at the top and they crashed out, the psychology there is like, all right, I'm never touching this again. And there's friends of mine that won't ever touch Bitcoin again. Do you think this psychology is going to carry over to some of the institutional players as well that maybe bought at the top, they got crushed here recently, and then they're no longer going to look at that? Or do you think institutions, to what you were saying just now, realize that this asset is unlike anything else and they need to stay in the game essentially?
Interested to get Danny's perspective on this. We haven't discussed this directly, but for me, I think that would simply be a case of the extent to which their research teams have looked at the asset. So heuristically, when you approach Bitcoin, I think it's a truism to say that it looks like a scam. It sounds too good to be true. You know, you might approach it with a traditional mindset of, oh, it's not backed by anything. It needs to be backed by a government or the full faith and credit of the United States in order to be money, for example, which is what you hear from a lot of traditionalists. Once you realize that it is an almost indescribably secure computer protocol that operates without the say-so of any government, any nation state, or any CEO, and it is more akin in asset terms to an element like gold, but at the same time, unlike gold, it can be sent at the speed of light, then there's an interesting value proposition there. But it takes a little bit of time from the research team of an institution to look at that, and then to understand what differentiates Bitcoin from Dogecoin, for example. One of the commonest questions that I get in this space is, why can't I just invent another Bitcoin? And if I can do that, why does Bitcoin have any value? And that's a good question to ask. It's a hard question to answer. And it's not a question that you can answer very quickly. Danny, interested in your perspective as well on that.
Yeah, I think we obviously talk to a lot of institutional sort of players in some respects, and mostly UK, European sort of focused. And again, we've been in the industry now for over 11 years now. And every single cycle we see the bear market, and that stings a lot of people. And you are right, a lot of the retail will think, I'm never touching this again, never come back to it again. And each cycle we have a different hype and reason, whether it be altcoins, blockchain, DeFi, obviously, NFTs, etc., all the different things that will sting people on the way. And then for the 11 years, we've been left to pick up the pieces and try and educate people again and try and pick people up again and explain why Bitcoin and why not everything else. And we've done that many times over. What we are starting to see, I think in the last couple of years especially, we're seeing more people come from many years ago that were in the early days of signing up for a Coin Corner account, for example, and then they've come back 7, 8, 9, 10 years ago, 10 years later, and they're coming back and actually buying some Bitcoin now. And sometimes that's people that had potentially been stung many years ago, or we had one, we were just talking about this internally the other day, where we had somebody who'd signed up, I think it was about 8 years ago or 9 years ago now, to Coin Corner. They didn't do anything. They just signed up and got an account. And then 9 years later, they log back in and buy some Bitcoin. And it's just taken them that time to become comfortable, get more educated. Obviously, that is a natural thing within Bitcoin. When people first hear about it, it's a pyramid, it's for criminals, etc. But over time, as that changes, sentiment changes around it, I think it's becoming more and more positive, and we will see more people eventually coming back around to it. Even if they have been burnt in the past, I think they will eventually come back around to it. So I'm not too worried in the long term of that sentiment, and I think it will continue to be more positive and spread the positivity. Institutions as well, the same story. We've spoken many times to various institutional size companies over the years. Many of them have dipped their toes in the early days, and especially the early days frustrating parts of the blockchain concepts around things. And they try to dip their toes in that, even though we try to guide them away from it and stick to Bitcoin. But they do keep coming back around, and they, as Freddie touched on there, and the research, the R&D departments, and they will always continue to dip their toes in as they see a potential opportunity. They will keep dipping in as and when until they find something that fits for them and something that works, and then they'll fall through then a larger scale. It's still, even though we feel like we're so far into Bitcoin these many years later and it's starting to become more mainstream, the big institutional side, they're still just dipping their toes in the R&D section side of things, trying to figure out where they fit in this world. And I think that will still continue for the next 5, 10, 15 years, and companies will eventually find their place. But it takes time. These things are not built in a day.
To your last point, Brian, I'll let you go real quick, but Freddie, you said around it is an attention economy, and can Bitcoin maintain dominance when there are other options like launching other tokens? I do feel like this past 2 years has been good to show Solana, you can launch thousands of tokens every single day. Like there are thousands of tokens launched every single day. Now there's millions of different like opportunities, and there was an interest spike in altcoin dominance, or Bitcoin dominance dipped versus altcoins, but that's almost a really good stress test that we've already been through of, you could theoretically go create a new Visa or MasterCard, a global payments network, but, so it's able to do it, but it's so hard to hit that scale. And I think there's just so few instances of someone launching a token and then walking away as a founder, and people trusting end to end either the code or the founder, or that it's going to be adopted. And distribution is just the hardest thing, because really AI's democratized all software development. Like anyone can build anything in a single day with AI coding. So it's all about distribution. So it's at least been good, I think, on the positive side to see, hey, we're already attacking and we're already testing that particular FUD or use case of like attention economy. Can other stuff come out? I think you have Zcash now, people talking about privacy, but there's the whole founder aspect or centralization aspect of Zcash that I think is still a concern, that is not going to lead that new tech to replace Bitcoin. Brian, I'll let you weigh in with your thoughts.
No, that's a lovely summary.
Quick, you have something to say.
I don't carry on. Sorry.
No, I didn't mean to interrupt you. Go ahead and finish your thought there before we move on to the next topic.
You may regret that. It's going to be a bit of a convoluted story. I love what you said, Jody. I completely agree. And I think it's a fantastic stress test of what it takes to create a new token. And the best answer we have in some respects to someone saying, why can't I create another Bitcoin, is that everyone else has tried, and all of those other attempts have objectively trended towards zero as against Bitcoin. Taking a step back, I tend to try and approach this in the context that coin is essentially, it's digital money with a certain set of properties. Everything else is more or less a venture capital backed tech company. And I've worked in tech for years. I've got nothing against venture capital money or tech companies. Some of those may find product market fit, some of them may not. Personally, I actually appreciate the honesty of many meme coins, which don't pretend to have any utility at all, beyond being gambling tokens, basically. And I find that level of honesty refreshing. If you want to gamble on a coin from Scottie Pippen, then I'm a freedom maximalist. You do what you want to do with your money. Yeah. Don't expect that Scottie Pippen's ball token is going to become a decentralized protocol for moving value on the internet in 50 years' time. You're completely free to do what you want to do with your money, and you want to take a punt on Pippin's token, you be you. The final point, I think, is in terms of your original thesis, Jody, I think, around why it's so hard to create a viable alternative to Bitcoin is the chess example. The rules of chess are well known. They've been played for thousands of years. They have that incredible network effect, which no other token can hope to achieve. And you and I could invent a new set of rules for chess, and we might have a great game between us, but no one else is going to play it.
Yeah, that's a great point. The network effects. I was listening to a podcast Jack Mallers was doing, and he answers questions from his audience. And they were saying, why are you going to partner with Visa on a credit card if Stripe does a credit card? Is how else are you going to use a credit card? Am I going to go out there and build the Jack network one retailer at a time? And he's like, I've already done that. That's what we did with Lightning, working on Lightning early on. Where we are today is based on not just his work, but everybody who was trying to utilize the Lightning network and make payments easier. But it's the network effects that I think are underappreciated that Zcash and these other coins probably will struggle to replace in Bitcoin. This has been great so far, guys. I know we could go into this for hours and hours with you, and both on the policy side and running an exchange and all the other businesses that you guys do. But I know we also wanted to get into HODL and a little bit more about what's setting you apart, why the UK market is exciting for your company within that market, and what you're trying to do differently from any of the other treasury companies out there. So I thought maybe we could transition to at least give you some time to speak on those topics. And I know you've spoken already on a number of these things, but what's new and exciting? What do you really see as differentiating yourself, especially as we go through this sort of treasury winter? I don't know what to call it, but and the timing that you guys are getting in, it could be really good timing or bad timing, but would love to just dig into that with you.
Absolutely. I love that you mentioned Lightning in your preamble. For me personally, that's the key differentiating factor for us. So HODL was effectively set up to try and answer one question, which is that if you have a lot of Bitcoin, how do you make money from it? You're probably familiar with the fact that Warren Buffett doesn't like gold because he views it as a non-cash generative asset. And in fairness to him, although he said a lot of rude things about Bitcoin, he doesn't like Bitcoin for the same reason. And a lot of investors don't. A lot of traditional investors like to put money in an asset that generates cash flow. And so Danny and I and the rest of the team came together to try and answer that question. How do you generate revenue from this valuable asset, Bitcoin, which you hold, in a safe and self-custodial way? And the Lightning Network is integral to the way that we've answered that question. So we like to think of ourselves in probably two limbs. Yes, like most treasury companies, we will issue equity and down the line other instruments in order to buy this valuable asset, Bitcoin. And at some point, we may issue other liabilities like convertible notes against that asset. But at the same time, we are absolutely focused on moving Bitcoin away from being just a store of value and into the next step of its evolution into money, which is the medium of exchange. And for us, Lightning is the best developed way of doing that. There are obviously other second layer protocols that enable real-time transactions to take place and are also integral to the growth of Bitcoin into money. But for us, the fact that we've got, and again, I'm going to blow Danny's trumpet here, Danny and some of the other team are some of the best Lightning engineers in the UK, if not in the world. And the fact that we have those on our team and we can both acquire Bitcoin to hold in treasury and then also exploit the resources that we have in engineering terms to maximize the amount of revenue that we bring into the company, revenue that importantly is denominated in Bitcoin, not in fiat, then we're able to increase our sats per share for our shareholders at all times. Danny's put out a bunch of tweets recently simply saying, we earned Bitcoin every day this week. And that is what we've been doing since we put our Lightning node operations to play. Danny, obviously defer to you on the technicalities there and then there as well.
Thank you, Freddie. Too kind as always. Yeah, I think I won't repeat everything Freddie said there, so I'll try and keep this bit short. But yeah, I think the differentiation between ourselves and other treasury companies at the minute is there is another one, Liquid, in Canada, are doing similar, where they're looking to make use of their Bitcoin. They're doing that on the Lightning Network as well. There's other methods that people can look into as well. There's other ones that HODL obviously will be exploring outside of the Lightning Network to generate a yield on the Bitcoin. And the Lightning side of things and what we're doing there obviously is incredibly exciting because it supports the network from a payment perspective. It's something that from within the exchange side, we've been operating. We were one of the first exchanges in the world to add Lightning, and we've been working with that ever since. So we've got great insights into what and how you can utilize Lightning and how you can deploy that liquidity into the Lightning network to then generate a yield and a return on this. And this is the bigger picture going forwards. If the Bitcoin treasury companies are going to start to operate more like a bank and a credit issuer in some sense, I think seems to be the terminology being passed around at the minute, being a credit issuer. And similar to what you're seeing with MicroStrategy and doing the preferreds, this is where companies will go to as a Bitcoin treasury company. They won't just be issuing equity and they're buying Bitcoin. There's going to be lots of clever sort of financial mechanics around what they're doing here, which is the underlying aspects of how do you generate more Bitcoin and doing different things to do that. So this will be a long-term play for these guys. I guess we've just tried to front run this in some respects and start running with this now and trying to create that foundation and that yield on the back of Bitcoin in the way we know how natively.
How do you think we get Lightning to take off? And especially now that stablecoins have taken a lot of the mind share, different reasons, but from a normie out there, it's okay, I can use stablecoins in real life or I can use Lightning in real life. How do you think and one thing I guess I've always thought that one Bitcoin is almost too big to buy a pack of gum, to think it's like 0.0001 Bitcoin. And then also 50,000 Satoshis feels like too much as well. So is there an education piece that you guys have thought of as like Bitcoiners throughout the world need to start thinking of like, all right, how do we make it closer to like logical numbers where it doesn't feel like hyperinflation? And then also the piece on stablecoins of how do you guys educate people on why Lightning versus why not off ramp to a stablecoin?
So I think the big thing is pull Lightning and stablecoins together. And that's obviously happening in January. It's already happened in the background with a few variations, but Tether are bringing USDT to Lightning by the Taproot asset side of things. And that should be going live in January time. And Tether, I think as everyone understands and knows already, they are very big Bitcoin believers and drivers of Bitcoin adoption. So they will be, I assume, heavily pushing people from Tron, Ethereum, etc., and moving them away from that side of things and moving them to the Bitcoin Lightning layer. Whether you're using Bitcoin on Lightning or whether you're using stablecoin on Lightning, the Lightning layer itself being that mechanism or that technology in that layer to actually move value around the world, almost instantaneous, incredibly cheap cost, whether that's Bitcoin or whether that's USDT or whether that's another token that sits on there as well, or another stablecoin, that will all happen on the Lightning Network. And that will be the, I guess, I don't want to call it a settlement layer because we traditionally call Bitcoin the settlement layer, but that will be the layer to move that value around the world. So I think that's how you get more of the adoption on the Bitcoin side of things for Lightning, having that stablecoin come onto it. Education around the sats. I don't know if you've got some thoughts on that, Freddie, if you want to jump in there.
Not anything groundbreaking on the stats, but just picking up your point there around I suppose it's the symbiotic relationship really between certain stable coins and Bitcoin as well. It's important always to think of the purpose for which anyone might be using stable coins or using Bitcoin. So if you're lucky enough to have an opportunity to save your money, you're likely to want to save that in a money that isn't eaten up by inflation or monetary debasement. Yeah. So this is where I think a wallet like the Aqua wallet is quite interesting to look at. So Aqua was obviously developed by Jan 3 with a specific focus on the global south, acknowledging that a lot of people in the global south will make payments with Tether, but at the same time, they may be lucky enough to perhaps want to save in some Bitcoin. And so that kind of wallet enables very simple swaps between on-chain Bitcoin, sort of what they call layer 2 Bitcoin, which includes both Liquid and Lightning, and then a swap into Tether as well. So to Daddy's point there, certainly for our business at HODL, we are effectively almost asset agnostic as to what is moving on the Lightning Network. So to the extent that Tether increases demand for Lightning liquidity, that's great for us because it means that the infrastructure services that we provide as a business are going to be in more demand and we're going to make more revenue. So we'll be happy. Tether CEO Paolo has already said, why would anyone build on a network less robust, less secure, less reliable than Lightning and Bitcoin? And so to Danny's earlier point, I think there's likely to be a symbiotic convergence between the issuance of stable coins and the Lightning Network, and therefore increased demands both for our services and therefore for revenues as well. On Strength versus BDC, I honestly don't think I have a good answer to that question. Some of that I think is a mental model. I'm old enough to remember when traveling around Italy, you'd be dealing with 1,000 drachma notes to buy a cup of espresso before the euro was brought in. So it is. And God, I grew up in Zimbabwe, and up here, I think that's what I. So yeah, I have a note here. I think that's $50 billion. So no, sorry, this is $500 million. This Zimbabwe note. That's about $2 now, I think. Maybe even less.
That's
So
from River, yeah?
yeah,
Yeah. Yeah, River. I got one from River as well. It's pretty cool.
yeah. I mean, I feel it's quite key because I grew up in Zimbabwe. So I have on my bottom wall, I have a framed $2 note, which I got when my teeth came out. And from 10 years later, a $500 billion note. Same purchasing power. So I think to your point around some of that may be an education point. Some of it may be, I think that's the third stage of monetization. Once we move into unit of account, maybe people will intellectually understand that a stick of gum is 52,000 sats. And that will be easy even to make. But I think we're still transitioning from store of value into a medium of exchange, and unit of account is still quite some way away.
Yeah. I'd want a whole episode.
This is all really
about
interesting.
Zimbabwe and growing up and hyperinflation too, by the way.
Yeah, no, this is great. We're going to have you guys back because there's too much to go into with the time that we have left. But I guess to follow up on one thing, because I think within probably the treasury space, I've heard a number of people say that sort of the potential of Lightning for revenue and scale is just not there compared to other instruments. And clearly through this conversation, you both seem, no, that's wrong. So I would love to just dive in a little bit more. And I think you've done that a little bit on the scale side in terms of we're going to start seeing USDT on Lightning, and we're going to start using that for even more payments. And that's how we're going to see that scale for the business. But also, what do those yields look like in terms of when you're providing liquidity to the network itself with the Bitcoin that you have in the treasury and enabling people to do their transactions over the network? Because it sounds, again, you gave credit to Liquid, who's been doing this for a while, and I've spoken with Sean there, but I don't think everybody else in the Bitcoin treasury space is really grokking this in the same way that you guys are thinking about it.
Yep. Yeah, I think, of course, yeah, we believe in it long term, and there will be scalability there in the long term. And yeah, short term scalability is not into the billions of dollars. It's all public. You can see there's towards about $500 million locked into the Lightning Network at the minute. However, that's just locked in capacity as such, but obviously that can move back and forwards multiple times in a single day, for example. So you could do billions of dollars of transactions in a single day with that capacity. I think, again, coming with our insight of 6 or 7 years of running Lightning nodes and having that insight behind the scenes of the inbound, the outbound liquidity, all the pain points throughout Lightning, there's lots of services. Freddie touched on Aqua Wallet as well before. Again, great wallet, great concept of what they're building out there, and they have in the background the swap services between, as Freddie touched on there, on-chain, Lightning, Liquid. I think they even have one actually to cross-chain to Tron, Ethereum, etc. All of these things, these are services around Lightning, the services around the payments layers on Bitcoin. They are all there. The revenue is there to be made. Yes, Lightning is cheap, instantaneous and pretty cheap. However, taking a small piece of a big pie is something obviously we want to work towards with the Lightning Network. We are seeing, so we have released some of our data. We can't release all of our data through obviously trade secrets in some respects of what we do in the background and how we actually generate that yield. And that will be something that will become very competitive as the years go by. More people start to learn how and what you do behind the scenes. One of our strategies, we have multiple strategies running on the Lightning Network at the minute, and some of them we're figuring out, can we scale them? Can we not? Like, how far can we push these things? One of the strategies was yielding, I think we gave out was about 6% yield on the Bitcoin we locked in. However, that's probably not a very good metric either, and we'll have seen already Block in the US. So you guys will be obviously fully aware of Square recently releasing Bitcoin payments for all the merchants, which has been a great achievement to see finally. But they released about a 9.7% yield on their Lightning node, which was about a $10 million capacity Lightning node. Why I'm saying the percentage is a difficult metric to weigh up is they made 9.7% yield off, let's say, $10 million. In theory, they're making nearly $1 million in a year on the back of that Lightning node. So there's real revenue to be made there. However, that 9.7% could be a little bit awkward to narrow down, in the sense of some of that liquidity that you lock into the Lightning node gets churned through and made use of, and then gets recycled again and comes back around. And you could end up using the same 10 Bitcoin over and over again and generating lots, and which could turn your percentage yield into 10, 20, 30% yield on it over the time period. But because you're repeatedly cycling that through, as opposed to just locking in 100 Bitcoin, you could lock in 10 Bitcoin and cycle that 10 times by the time you've then made that yield. So it starts to get, the metrics a bit of a gray area. I think that the best metrics to go with is how much Bitcoin did you generate? And that's something that we will, from HODL, we'll continue to start to release as and when we can to the market, in terms of the amount of actual Bitcoin we generated from Lightning or from our yield activities, which will hopefully then start to show how you can really make yield on Bitcoin from this. You are right. You completely hit the nail on the head in terms of the scalability with the stablecoins. And as stablecoins come onto the Lightning Network, we will no doubt see more volume. And as Freddie touched on there, the more volume means the more liquidity required behind the scenes, and the more Bitcoin that will be required to be locked in to make use of the network. So that's where we come in. And that's where hopefully the scale comes in. Tether are doing, for people's understanding, I think I'm going to get my numbers completely wrong now because I can't remember, but it was about something like they're doing the trillions of dollars a month in terms of volume transactions on Tether across Tron, Ethereum, Solana, etc. So that volume is already happening. It's then how much of that comes onto Bitcoin, and then how we sit in behind the scenes and help fill that liquidity gap for that infrastructure. And that's where the scalability kicks in. So
Thanks. That's great. Yeah. And if we get Tether's volume, even if they're doing their own, Lightning nodes and everything, like that's going to be huge for everyone else on the Lightning network, just like increasing that fast with everything going. That's wonderful. I know we're getting close to time at this point. Jody, I don't know if you have a final question.
Yeah, I think if you look at sentiment right now, I think it's interesting. I also think it's healthy. Paolo Arduino, the CEO of Tether in general, for Bitcoiners, seems like there's been a good shift of acceptance of there's a genius stablecoin bill in the US. There's the fact that the global South uses Tether, whether it's on Ethereum or it's on Tron. It just has that same network effect and adoption. And I think two characters, CZ with Binance and Paolo with Tether, both international, both persecuted. The US government's gone after them, but they're very different characters. I think what Binance does with these like launch pads and launching thousands of tokens, and there's a lot of retail that's gotten burned by Binance, basically extracting as much money out of the gamification of it, and people just trading away their life savings thinking they're going to get the next 100x. I just can't recommend Binance's product to anyone. And Coinbase has a lot of the same stuff. So it's just not me as a Bitcoiner what I would recommend. But if you look at Tether, they're essentially like the face of stable coins. They've increased adoption, and you've also seen where if they're moving towards a Lightning network, they are supporting Bitcoin. It seems like Paolo they recently invested in one of our main sponsors for our podcast, Ledin. And so they're bullish on Bitcoin lending. They use Bitcoin as collateral and have since the beginning as part of what backs their stable coin. So I think it's healthy to see, hey, we are willing as a Bitcoin community to start to get in the mix with Tether and see that value versus it only being coin as the moving asset or what's being the medium of exchange. Danny or Freddie, would love to hear if you guys have thoughts on that shift towards Tether acceptance.
Yeah, I completely agree with everything you said. I think Tether always has been a big supporter. So Tether, Bitfinex, they're obviously two of the same, but they have been big supporters of Bitcoin all the way through. Yes, Bitfinex, for example, do have altcoins on, make money on that side of things, but all of that money is plowed back into the Bitcoin ecosystem and trying to make sure that Bitcoin growth and adoption continues. Tether's had a tough time over the years, and they've pushed through, as you mentioned there, the US government's going after them for various things, and there's lots of other issues they've come up against, but they've managed to get through that. And all the way through, Paolo has been supporting Bitcoin, as have all the team there and the guys there. We do know and talk to the guys there, and they are Bitcoiners. They've been supporting this for many years. So yeah, they've been Tether on Bitcoin's Lightning layer has been on the cards for many years now. We've been pestering them for this and trying to help drive that through. And Paolo has said multiple times it's one of the top priorities for them at the minute, but they're a big corporation at the end of the day now. They're juggling a lot of things, and these things take time. So it's hopefully going to be January, and we'll hopefully see the fruition of many years of hard work from the Lightning Labs guys with Taproot Assets, and then Tether bringing that on as well. But in the background, yeah, they're working away hard, and as are a lot of the ecosystem ourselves and some of the guys as well in the background, to make sure that when Tether hits Lightning, there's an ecosystem there ready to support it and an infrastructure ready to support that hopeful growth and adoption. So yes, I like Tether. I like everything they've done, the stablecoin creation there. It's a bridge to the financial world, traditional financial world. And I think as Freddie's touched on there in the global south and what Aqua are doing, it's reached an audience, it's found a use case, a real world use case. And that's why they are what they are today in a multi-billion-dollar company. So yeah, it's a great thing, and it's a great supporter to have for the Bitcoin ecosystem and the network. So yeah, all credit to them.
Cool. Danny, thanks for hopping on. Freddie, I see you in the background. You're still off stage. I don't know if you wanted us to pull you up with while you're driving there, but thank you guys both so much for coming on today for Treasury Talks. We'll be doing this every Thursday. So I know we're pre-recording given the holiday, but very cool story, I think, overall. And definitely would love to have you guys back. I mentioned for Freddie specifically, I think it'd be interesting to hear his journey from Zimbabwe and seeing that in real life. That was the one thing that orange pilled me. I listened because in the US, we still trust our banks, but hearing stories, I think it was on Laura Shin's podcast once about a guy from Venezuela. And you guys don't get it yet. We need Bitcoin. Like, we survive off Bitcoin. And hearing perspectives from different countries is always interesting, I think, for our US audience. Thanks for coming on.
Thank you, guys. Take care. Have a nice Thanksgiving as well over there, guys.